Give it up for Danielle DiMartino.
Danielle DiMartino.
Danielle DiMartino booth. Okay, we got a lot to go over with, so let's bring in QI Research, the CEO and Chief Strategist, Danielle DiMartino booth. Danielle, I was talking, I want to first of all get your initial thoughts on what Edward just said and what we know so far.
Well, I think that the biggest nod was to the fact that the word stabilized. The fact that we have not seen the unemployment rate continue to increase. Now we're going to have more onus yet on Powell to explain that in his press conference, because we have seen other measures of the labor market weaken.
So if he's going to explain that, will he have to explain this? After the first Fed rate cut, historically, rates go this way. Mm-hmm. This time around, it's going this way, the 10-year yield, rather. What's going on? Can he explain that? Can anyone explain that?
I think, well, it is purely the risk premium, which is not explainable. You cannot, it's an inexplicable factor, because it's not inflation expectations that are rising, and it's not growth expectations that are rising, neither nor, in fact. But I think what the big takeaway from here should be is the fact that not just the unemployment rate has stabilized, but interest rates have come back down in the past few days. It all started with Governor Christopher Waller.
Let's start with that. Okay, so January, it's so interesting because the Fed came out with that 50 basis point cut. Mm-hmm. Then they cut again. That last cut, it felt like every one of them just about said, we were close, it was close. It felt like buyer's remorse. And they spent all month long sort of going over like, okay, is buyer's remorse. And what's interesting is you're seeing a neutral stance. And before, we're going to proceed with more caution. Harker saying the same thing, right? Before we keep going ahead, we need to be dependent upon the incoming data. Collins saying the sort of thing. We want to be gradual and patient. All of a sudden, this Fed that came out the gate strong with a 50 basis point cut, they're saying, no, we need to see sustained progress. But to your point, Waller, the most recent speaker, sounded a little bit like no. He says March could still be in play.
And it certainly could be, because quietly at that press conference, Powell and Waller reiterated that the Fed has a new inflation target that they're following that is more market-based, more real-time inflation data, including new rents instead of the imputation of owner's equivalent rent, which is it's a bunch of hocus pocus in a model. That, once you put that new rent index from the Cleveland Fed, ironically enough, because it was Hammack who dissented, that measure that Waller and Powell have cited is at 0.98%
What does that mean?
Over year.
That means rents are coming down a lot faster? Or,
yes.
Okay.
But it means that the new gauge that they're following is more than 1 percentage point below the Fed's 2% inflation target.
Should they be following a new gauge for employment, for labor? I mean, first of all,
they're following a new gauge for inflation, and that's what's key here, because the biggest input, which is shelter, has come down hard.
But it wasn't long ago, right? The first time when they cut 50 basis point, the onus was on unemployment, the U3 number being at 4.4. That was going to be their target. And again, these numbers get revised so often.
They do.
They're not
had
reliable.
A big revision this morning.
I just don't understand. Like, I don't get it. All right, we're talking about these rates and mortgages. Now, of course, the Fed doesn't directly impact mortgages, but obviously, folks, you can see the parallel, right? Fed funds rates come down, mortgages usually ease up. But mortgage rates are really here, and at some point, does the Fed care about the housing market? Young families buying a house. I mean, does the Fed care about that?
The Fed has to care. They make policy for the public good, not for a few select individuals. And whether you're talking about mortgage rates or credit card rates or auto loan rates, for your average working American man and woman, they're still way too high.
All right. So let's talk about this then for a second. Wall Street thinks that scared, that spike at the 10-year, to your point earlier, that it's over. We can now see buyers are starting to really pick up here. Yep. But this is J.P. Morgan. People are buying. Their clients are buying treasuries.
And they were just a hot minute ago selling them. And now we've seen a major flip in positioning.
So does that suggest to you then that maybe the coast is clear?
I wouldn't say the coast is clear necessarily, as much as there's a lot more uncertainty going forward about where this economy is headed.
So, but why would Wall Street be buying? I mean, is a dangerous guessing game?
It's not a dangerous guessing game if Wall Street's starting to price in, as Waller said, a rate cut in March instead of it just being two rate cuts.
So you think there could be a rate cut in March?
I absolutely do. You've got about a third of a probability of that going into this press conference. Let's see what that is when we close today.
Real quick, obviously, Powell's going to be asking about President Trump. He's going to be asking about tariffs. What do you anticipate him saying?
Well, luckily enough, the Fed released their 2019 transcripts for the entire year today, Charles, which goes through and blueprints how they handled tariffs back then.
But how do you handle a president that's calling you out, that says, I know rates better than you do, the Fed doesn't know what the hell they're doing, the Fed is hurting the economy,
Again,
they're hurting the agenda that the American public paid for?
I worked at the Fed for 9 years. The Public Affairs does not release an entire year of transcripts on the day the Fed meets that blueprints how they're going to handle how they handled tariffs in 2019 if Powell's not going to be able to fall back on that.
Yeah, but he's going to be asked over and over again.
And he's going to be asked about the balance sheet.
Yeah. So you'll stick with me?
Absolutely.
Come back. This is going to be one heck of a press
excited.
conference. All right, folks.